Welcome to the Pirls Stock Market Commentary video, your weekly window on stock market technical conditions, featuring the proprietary bull, bear, point, and figure market breadth summary chart for December 30th, 2018. Market breadth. With this past week's market advance, our bull, bear, point, and figure ratio at 0.30 rose from 0.15 last week. The total count of securities in bullish or bearish patterns decreased 12% to 3,471. The count of bearish stocks decreased 22%, while the count of stocks in bullish patterns increased 54%. The Pirls P&F Market Breadth Summary Chart shows us a market now 15 weeks in bearish territory. Paid subscribers have access to the Open Office Calc data from which the chart is generated. You may become a paid subscriber by visiting s2pmarketsignal.com, clicking Membership, clicking Register, and following the prompts. To receive the weekly Pirls Stock Market Commentary via email, free of charge, simply enter your name and your email address in the spaces provided and click Subscribe. The well-known market breadth indicator, the Nasdaq McClellan Summation Index, fell 189 points for the 11th decline in 16 weeks. At a negative 1,251.80 points, it continues below all 8 tops above plus 100 in the last 30 months, and it continues below the 4 bottoms below minus 100 in the last 30 months. Volume analysis. In this week's volume analysis, the Nasdaq Composite Index ended in neither accumulation nor distribution mode, with average daily volume lower than the prior week. In the last 2 weeks, the Nasdaq had 1 accumulation day and 4 distribution days. Accumulation days are counted when the index closes up on higher volume than the prior market day, while distribution days occur when the index closes down on volume higher than the prior market day. Last week, the Nasdaq ended in distribution mode on higher average daily volume. Momentum. The CCI 20 daily, in a Woody's downtrend, is now at a negative 64.73, up from a negative 205.57 last week. At Thursday 12/13 close, the CCI 20 daily formed a zero-line reject short entry signal. At Thursday 12/27 close, it rose above minus 100, signaling our exit from the trade simulation. The result was a gain of 369.58 points on the Nasdaq, or $11.98 per share of QQQ. In Woody's CCI trading system, 6 consecutive bars above or below zero are required for a change of trend. The weekly CCI 20 of the Nasdaq Composite Index began a Woody's downtrend 6 weeks ago, while the daily CCI 20 began a Woody's downtrend 11 weeks ago. The CCI 20 weekly, in a Woody's downtrend, rose to a negative 159.33 from a negative 179.39 last week. It continues outside the plus or minus 50 range required for a valid zero-line reject short entry signal. Industry rotation the last 2 weeks. Only one of the top 5 industries is positive, and all of the bottom 5 are negative. Summary: gold and silver, brokers, and some tech on the top. Oil services, and REITs on the bottom. Bullish, brokers, and disk drives have entered the top 5. Oil services continues in the bottom 5. S&P retail has left the bottom 5. Bearish, gold and silver continues in the top 5. REITs has entered the bottom 5. Focus this week from www.zerohedge.com. A history of market crashes in charts. The following are some key points and a chart. Note the ZeroHedge.com article includes other charts worth examining. With mainstream investors finally questioning the very integrity of the markets and their ability to accurately set prices, a phenomenon that we have been warning about for some time now, Bloomberg's editors decided that now would be a good time to remind their readers of every major sell-off of the 20th century as a way to nudge the market that sell-offs like the one we just endured are quite normal and have been happening since the days when order tickets were written up by hand. Don't tell that to any of the hedge fund managers who will be shutting down their hedge funds as a result of December's bizarre market violence. In any case, as Bloomberg claims, vicious sell-offs like the 20% drop we just witnessed are, quote, far from unheard of, end quote. While any 20% sell-off hurts, the one happening now is far from unheard of in terms of depth or velocity. Over the past 100 years, there are almost too many examples to count of stocks tumbling with comparable force. Quote, it's an inevitable process, end quote. Marshall Front, founder of Front Barnett Advisors, who began on Wall Street in 1963. Quote, it goes on over and over again, end quote. In fact, sell-offs like these are, quote, very normal, end quote. Quote, this is very normal. It unnerves people because we're all talking about it all the time, end quote, said Nancy Tengler, Chief Investment Strategist at Tengler Wealth Management. Quote, it's in our face more. We have too much focus on the day-to-day or minute-by-minute or second-by-second movements. Historically, is this normal? Yes. End quote. Thank you for watching this week's Sand to Pearls Stock Market Commentary video featuring the proprietary Bull-Bear Point and Figure Market Breadth Summary Chart compiled by Donald Pearl. This week's Sand to Pearls Stock Market Commentary video is not normal, being that it's the last one of the year. May we take this opportunity to wish you a Happy New Year, a blessed 2019, and true success throughout the new year.